Welcome to our special Diwali programming. Review, revise and rise. That is the theme we are celebrating on ET Now this year. And in this show, with a very special guest, we will pretty much follow the underlying theme of ET Now's Diwali programming. We will take the clock back, talk about important events which kept us going for the Samvat year gone by, and which are some of the key trends which in a sense are going to impact your portfolio. 1 month before the Diwali, everybody was feeling happy and excited. Now, it is only excitement and hope that the excesses in the market are cleaned out. So where are we in the market cycle? Is it a pause, or now the great Indian bull market which started in 2021 seems to be getting over? Let's discuss all that and much more with one and only Mr. Raamdeo Agarwal of Motilal Oswal Financial Services. Happy Diwali. Thank you very much. So nice to join you.
Happy Diwali to you and all the viewers of ET Now.
It's been a good Samvat year, whichever way you look at it.
You can't ask for more. I mean, in the sense that index itself has done about 25-26%. And on top of it, I think everybody's portfolio has done 5-6% better. So I think the return has been more like 30%. And we have a good base. So to make on a base of thousands of crores, it's simply fabulous, you know. So I think we had not seen any deep corrections in last 1 year. In last Samvat has been Samvat without corrections. I think very recently now we have seen some cut, 5-7%, 10% kind of cut, which is very healthy. And I mean, one can take this much without any problem. So I think now that extra heat is gone, October heat is gone, now we are coming closer to the November, and start of the pink winter is there for the market.
So we talk about health and spirituality. So last time when we met, you said always focus on deep breathing, which is Anulom Vilom. Breathe in, breathe out. So everybody was only taking stocks in.
Now Vilom has happened.
Now finally it is happening.
Yes.
But with this Vilom continue more?
I mean, that is for the chartists to figure out, that's their domain. But my sense is that to some extent Vilom has been done, and I have no idea whether it is going to extend. I mean, see, when I see about 5-year return, I am good for 5 years. 5 years about, as of yesterday closing, it was about 111%. So you can say excess return of 11% is there in last 5 years. I mean, that is either you can say it is done, or you can take away that 10-11% more. So I have no idea whether it is going to happen. But we are pretty good, 15.5% kind of return for last 5 years. That's a compounding we are looking for. So in next 5 years, I would think we are ready for maybe a percentage lower, maybe 13-14%. So instead of 5 years, in next 5.5 years, we might double.
So I'll take the clock back and talk about the Samvat year gone by. And the big talking point which in a sense galvanized the market from last Samvat, for the entire Samvat year, was election. Elections have come and gone. Markets may have not liked the verdict, but from a market standpoint, that is something which has not impacted the market mood and the rhythm. Markets have not fallen because of the election result. Markets have fallen because of excesses in earnings. How would you analyze the impact of election? From a market standpoint, is it over now?
From market standpoint, definitely over. But you see, it's not a small event. It was a huge event. After 30 years, we got majority, and again we are back to some kind of a coalition government. And yet market was so resilient that intraday just about there was 7-8% correction, and then market just moved on. So that shows that there are forces far bigger outside the political circles into the market, playing into the market. Like as I said, I think the biggest force I see is the retail revolution which is on. The inclusive development of the market, where we're getting about anywhere between 4 to 4.5 million customers. Last month was 4.35 million. So that game is still on, and so the flow, sustained flow of SIP and even the block flows, that is actually providing a lot of resilience to the market, and that's why this huge event of political upset has just gone by. And good thing is that there is a continuity, there is stability in the political circle. So I think it is a thing of the past, and now even Haryana has come on their way. Let's see another 1 or 2 elections in the next 30 days. I would not think it has much impact in the marketplace. But yeah, I mean, I think the real thing to watch for the next 12 months is the earnings profile. How exactly the industries do, businesses do. and there are factors which are impacting quarterly results. You might be seeing just about 5-6% kind of a growth.
I'll get into the forward-looking elements, but my follow-up question on election is market did not go down on elections.
Yes.
But they're reacting to China, which is a global factor. So rise of China is leading to volatility in market.
That's very technical, Nico. You cannot see, the world had become just about, I'm telling you, last month, exactly a month back, 23rd or 22nd, the day on which stimulus came, one day before I was in Hong Kong, talking to all the institutional investors who invest in India. And they were so depressed, I'm telling you, that, actually after 5 road shows, I thought I must run away from this city, otherwise my entire Teji will go away. They were so depressed, okay? And they said nothing can happen in China. And they were also not excited about India because China was so much cheaper compared to India at that point of time. And then I said, if I can't sell India, let me try to market China. I became very bullish on China. Actually, it was a very bullish case. And by evening, the stimulus came. Next day, after the stimulus started, then also they didn't believe that this is going to be permanent. And then market blasted off. Second day, I think market went up by 10% or something like that. So I think there was so much of disbelief about China. Because China is a huge economy, almost as big as US. Chinese weight in the global index is just 2%. America is 63%. We are at 2.5%. So I think that correction had to happen. Now, China and India both are kept in the same bucket. And people were overweight in India and underweight in China. So that correction has happened, or most of it has happened. Maybe some marginal one, about 10-11 billion is already gone. Maybe another 4-5 billion might go. That's what my guys tell me, that anywhere between 10 to 15 billion dollars is the adjustment requirement. So that we are at the fag end of that adjustment. Once it happens, then it is good that premium between India and China is reduced.
Fair point. Okay. Geopolitics, that kept us busy, that kept us guessing. Thankfully, nothing escalated on Russia, Ukraine, but a lot accelerated in Middle East. But unlike previous instances, geopolitics this time did not even impact crude prices. Forget about financial prices. Why is that?
I think there is a oversupply of crude. The West Asian, Saudi Arabian, Middle East countries, the OPEC countries basically. So non-OPEC production has just gone through the roof. Like US is producing about 13.5 million barrels a day, by far the biggest. So what happened was that I think Kazakhstan, US, Brazil, a lot of non-OPEC countries, they started producing a lot of oil. And that, so to maintain the price, the only person who was trying to maintain the price is Saudi Arabia. And they kept on backing down their production just to keep the markets balanced. And that's where I think they lost, 25-30% of the production from 10.5 million barrels a day. I think they reduced about 8.5. So now they're frustrated. They cannot go any further down in terms of market share loss. So I think there is a massive supply of oil, and there is an energy transition also on. So the growth in the oil demand is not happening at the pace. So now you have again like an oversupplied market, and demand growth muted. So I think we are looking for a very, in a worst of the time, if oil price doesn't go up, then you know what is going to happen. In normal times, say, as Trump is promising, and by chance he comes, he says, in the first 30 days I will stop both the wars. You know, so if that were to happen, suddenly oil price will collapse.
The other aspect which we need to discuss is the Indian consumer and the patterns which have emerged in last 1 year. Urban economy seems to be topping out. Rural economy is making a comeback. DMart is struggling for growth, but quick commerce is growing. How would you assess the Samvat year gone by for the Indian consumer per se? Because there are trends within trends within trends.
See, the quick commerce is it's a revolution. India is the place where delivery should happen. There is a highest competitive edge. The lowest cost of delivery is possible only in India, because this two-wheeler, the guys are affordable. Then you can. So I think, and it's a very dense population in cities, and we have a lot of population. So I think for 50-60 bucks you can have a profitable delivery, which is less than $1. Nowhere in the world it is possible to deliver in 10 minutes for 60 bucks. So now, and if you and me have to go and pick up stuff, I think it's a lot of pain, in the sense that you have to park your car, you have to go to, for 3 things, for say a bakery, and then the grocery, and then pharmacy, or you have to go to as many shops. Here in one click you get everything, and that too in 10 minutes before you can even go to the car. So I think, and price is also competitive. So my sense is this is a changing the consumption pattern in every household, not only top ends, across. Everybody is looking for convenience. So I think that's where I think there's a big revolution, and it's a $1 trillion kind of an opportunity. In that even there is a 10% transition. We are in next 7-8 years. I think you're looking at $50 to $100 billion kind of a FMCG plus whatever they are going to deliver. It's an evolving category. It's a revolutionary kind of a thought process. Now they are not making money, which I don't like. They should be making money. Now Zomato has shown some profit making, but I think Swiggy and Zepto is an early stage. So I think we have to see all these warriors when they make money, but very promising field for money making.
So I'll move forward now. We've discussed the Samvat year gone by, now the current Samvat. First question which everybody wants to perhaps understand from you, if the starting point is today, considering the last 3 years have been great, you enumerated the returns. For next 3 to 5 years, I'm not using 1 year, what should be the return expectation from equities?
Always have a fixed rate, 15%. It's a wonderful rate to have. This is a 15% country, I'm telling you. I mean, 40 years, 30 years, 25 years, you do it, it's all anywhere between 14 to 15%. You know, even 5 years, post-COVID, 5 years pre-COVID, just about 90 to 24. It is 111% for last 5 years. So it works at about 16%. So the moment you do 5 years, you are set. You will be about 14 to 16%. You know, so if you think market is high, you might make 14%. If you think market is low, see market goes down by another 10-15%. You are set for 16% kind of return.
But next 3 to 5 years, the CAGR to your mind, now whether it is 11 or 15, that's the base effect and that's the market cycle impact. But the probability of getting double-digit returns on a CAGR basis the next 3 to 5 years from equities is reasonably high.
Now now you ask about probability. Next year, 15% return, probability I have no idea. It can be 0, it can be, it can be anywhere. It's a toss of coin, 50-50, okay? You go to say 5 years, double-digit return, 10% plus, I would say 90% chance, okay? If you go to 10 years, 14-15% return, like probability is like 98-99%.
Okay, great. Second, I'll move to what defines return, ultimately is growth and earnings. We've discussed India's GDP growth, you've given us the numbers. Let's understand earnings. For the second quarter on the trot now, earnings are down. The slowdown is visible. You can smell it and you can feel it. Do you think this is a temporary blip in earnings? Will earnings revive? And if they will revive, what will drive the earnings?
Yeah, so people who are know of things, I'm not a macro guy, so I keep hearing the chief economic advisor or RBI or our FM, whatever they say, we have to, because they're talking from data and their understanding of things, and they are going to make things happen. So RBI just said that they still stick to 7% kind of growth projection. They are the guys who are doing the numbers. They are the economists on the ground and everything. So they are saying that first half was impacted by weather and all sorts of things, and also election. So that slowed down the government expenditure big time. Okay, so I think second half will be best of government expenditure and private capex, whatever it has to pick up, and consumption. So all cylinders should fire in second half. So I would say Q3 and Q4 should be better than first half of the earnings. That's what is being touted by regulators or people who know of things. So clearly second half should be better, and then it should pick up. So a lot of things are going to happen in the sense that policy decisions will happen. Why should we think that nothing will move? Rate cycle is all over the world, it is coming down. Okay, RBI is saying that they will not make a hasty move right now, but direction is very clear. Maybe if not in this 2 months, then after 4 months, 5 months, it will happen. Actually, your inflationary pressure which is there right now is also going to subside as the fruits and vegetables come post is Diwali and all. So I would think that the earnings outlook, I think this is the worst. If it is 6-7%, maybe it will be 10-12% for the second half, and then from there we'll take it as a lower rate cycle, lower crude prices. US election will be behind. Trump will be there to stop both the wars. So world will be a far more peaceful place. So let's take it as we go forward.
sectors which have been in limelight for right reason and wrong reason. PSUs and banks. Nobody expected PSUs to go high, and everybody expected banks to recover. Where are PSU stocks headed, and will banks make a comeback?
See, banks has two aspects. One is the PSU banks and other is the private sector bank. So banks, PSU banks have done exceedingly well. Actually, almost 2-3x of index they have done. I think they have returned about 25-30% against 10% of the index. So they have done very well. It is the private sector bank which were flying for last 10-15 years. They had their kind of some kind of balancing between public sector and private sector. So whosoever wanted to buy public sector, they sold private sector and bought into private. So I think correction in private sector in terms of valuation and all sorts of earnings, all management transitions are happening in Kotak, HDFC, all things, everything is now over. It's a second inning for the private sector banks. So, so private sector bank has its own kind of thing vis-a-vis public sector banks. Other public sector companies, including public sector banks, there was zero performance for last 10, 15, 20 years. It was a correction of unbelievable order. I mean, banks had come to about 0.2, 0.3 book. Other PSUs have come at, I mean, Coal India and all had come to about 3-4 P multiple, TTM, with a massive 7-8% dividend yield and all. So clearly they had to be corrected. I mean, they are large enterprises. You cannot just kill them. So that unpopularity was at absolute rock bottom. So that has corrected. So now from here onwards, don't differentiate between PSU and private sector. That's a myth. I think we should look at them as a meritorious banks or whatever they have, defense companies or railway companies. And I mean, let's not have a separate P multiple for them and this. I mean, look at ROE growth, what potential they have. You have indigenization of, massive indigenization of defense. That will continue, and hence the defense, whether it is public sector or private sector, those companies will do well. But if you have done excessive buying, and of course they will also sell, government will also sell. They must sell. If they don't sell now, I think it's a waste of, I mean, in bad time they didn't sell, good thing. But in good time also, if you don't sell, then when will you sell? So I think that is one opportunity which government must use, and use the resources for other developmental projects which will further push the economy. So those things will happen. So a lot of things are going to happen, and wherever you see reasonable valuation, corrections have happened, earnings growth is visible, I think go and buy.
The rise of retail and the rise of F&O, they both are parallel. One side SIPs are at a record high, on the other hand speculation in the F&O market is also at an all-time high. Do you think they both will coexist?
Yeah, see, speculation has to be, see, a bit of speculation is very, very good, very healthy for the market, because it provides immediate liquidity for exit and entry both. If I want to sell 10 lakh SBI, it is better sold through F&O. I mean, I can sell only that much on the spot. But if I want to sell 10 lakhs in option and future, it can be done in 1 hour without impacting much the price. And let me tell you one thing, Indian markets are still shallow by global standards. They say that Australian market might be half the size, but I mean, you buy $1 billion, it doesn't make any impact. 1 bip, 2 bip, and you can get out. Here you buy $1 billion, I think it impacts, massive impact is there in the market. So I think we have to make the market deeper. So the F&O is one of the big tools. See, here promoter holdings are very high. So despite your market cap looks big, your actual floating stocks are much lower. So the F&O comes to your help for the institutional investors who want to buy very large quantity or sell large quantity. So there is a role of F&O to be played, but it should not be excessive also, that it destroys the entire retail or fabric of the entire investment culture. So I think that's where the regulators have come in, and let's see how it develops.
So I'm going to set the template here, a framework of QGLP, which Motilal Oswal Financial Services follows, and which is something which Mr. Agarwal has championed as an original thought leader, which is quality of the business, longevity of the business, price, and also the quality of the management. If the quality of the business is bad, you multiply with great promoter, it is zero, and vice versa. Who are your top 3 favorite promoters for next 5 years?
It's a tough question, and see,
you like the promoters, whether they create wealth or not, but you like what they're doing and the way they're conducting their businesses.
Yeah,
who are top 3 favorites?
So a lot of erstwhile, the traditional blue chips, they're always there. But emerging managers, emerging corporates, emerging sectors, like you get to see all this digital. See, one of the things is that apart from other sectors, these digital company sectors, they are going to really rule the roost. Because see, when business goes digital, okay, there are two types of business: digital business and phygital business. So digital, like if the transaction is digital and fulfillment is also digital, that's a digital. Facebook, Microsoft, all these companies are Google. Classically, you don't get to see anybody. Digital access, digital delivery. But then say Zomato and all, they're more phygital, where you do the transaction digitally, but fulfillment is physical stuff comes to you. So the businesses, so the digital business in India one by one is, say, like grocery. Again, it's a digital transaction but physical delivery. But Paytm or say PB, they are the ones which are like, you can transact it completely digitally. And lot many more companies I am seeing, small ones, they are going to come in. So I think digital businesses, and they are wonderful promoters, I can tell you this. They are, very well educated, right on top of it, way ahead of our time. उनके साथ बैठ के बराबर समझने का कि what exactly they, like yesterday, as I told you, there were guys from Canada and all trying to understand what they are doing. So I think that's where I think you are getting, apart from few newer ones like say Mahindra and Mahindra, so that management has kind of stormed the automotive market. In automotive, a very large segment. In that, from 200-300 rupees stock to 3,000 rupees, and it's still counting, and wonderful products coming on.
So can I say your top three promoter favorites? One definitely looks like Dipinder Goyal, because you've said Zomato. One definitely looks like is going to be Anish Shah and the Mahindra team. And your evergreen favorite is Sanjay Agarwal. वो कल भी था, आज भी है, कल भी रहेगा. Can I see these are top three favorites?
Yeah, see, there are lots of, I keep meeting whomsoever I like, I kind of flag it. But even, see, I'm telling you, digital side, you get far more exciting management teams, amazing teams, So I would bet on for future managements, a lot of it will come from the digital side.
So every Diwali, when we do a Diwali show, you always leave us with a thought. Thought not about markets, thought about life, thought about your understanding of human nature, thought about not what to do, but what not to do. So what is your thought this year you want to leave for our viewers?
So I just read, it's top of the mind, I'm not good in remember, but the book I'm reading, there he said, there is choice in every gamble, and there is a gamble in every choice.
क्या बात है? The choice in every gamble and the gamble in every choice.
Every choice. So, you have to figure out how much of this component has to be there in investing. You can, so, investing per se, you come to the market, it is a kind of gamble. But how much is the gamble portion and how much is the choice? By choice you are doing. Say, if I buy QGLP, perfect QGLP, still there is an element of gamble, whether it will happen or not, because G is all in the future. If G doesn't happen, I have paid for it and busted, So I may not make money. So I am gambling on the G. I am not gambling on the quality of business, quality of management. I am gambling on G and the price. So there is a gamble in that. But if you are outright, okay, you say, I don't care a damn about what is there inside, but I am choosing a highest price company, highest growth, and I don't care. Buy at any price. So then you are gambling a lot more. So you have to figure out, how much, because it is going to be extremely exciting. I'm telling you, this Indian story is going to become, this retail story is going to make this market, and there will be up and downs like we are seeing. So it is going to be very exciting, and you have to be, you have to survive, to finish first, like Buffett, again Charlie Munger, to finish first you have to finish. Okay, so so you have to be in the market. You have to be in the market, you have to survive in the market.
Money is made by spending time in the market rather than timing the market.
But actually surviving and prospering. Every downturn should, of course, it will take your net worth from say 100 crores to 70, 80. Don't worry. Next round is going to be from 70 to 150.
So true, so true. And something I've learned over years by interacting with Raamdeo ji is power of compounding, keeping it simple. सुबह उठो, प्राणायाम करो, नाश्ता खाओ, स्टॉक मार्केट मत देखो और लॉन्ग टर्म पे फोकस करो.
that can only, see, markets are down 5-6%, your portfolio is looking red. Still should be happy.
You should be happy. So true. But wish you a very wonderful year ahead and congratulations. Last quarter you made a landmark, 1,000 crores of profit. I'm sure it's a great achievement for any entrepreneur. So hopefully from 10 to 100 and 100 to 1,000 and 1,000 to 10,000, I'm sure it'll happen very soon and it'll happen in your lifetime for your firm. So thank you very much and always wonderful to have you on ET Now. Thank you very much. Thank you.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.